Good morning, everybody. That we take a look at a broad look at what happened yesterday and what moved and what didn't move. And was pretty much, I guess, on the back of anticipated earnings of NVIDIA and semiconductors, which you can see this chart right down here at the lower left, the biggest wide range bar out of any of them. That moved up very nicely up to this area of resistance. It's not a pivot, but an area of resistance and some congestion. That's where it fell from. And so the positive is that it was able to even get back up there. And you look at software to a lesser degree, that moved up a bit, stuck at resistance. Tech, XLK moved up. Maybe not quite at resistance. We'd have to go to the intraday charts to see a more exact view of that. As we look at other things, well, the Qs here, they have to have moved up, right? They did decently, but putting it in the perspective of the move down, really not a big deal yet. What you would expect after such a decline and into the area of a prior pivot low. So we'll see how far this gets or not today. Looking at others, you see the Russell wide range bar inside day. That didn't do much. That was, that kind of led the way down or went down the fastest and the worst into that support. So with that in mind, and we look at other things like, industrials that was an inside day, materials, pretty much an inside day, discretionary, it's got a void. It moved up a little bit. And what else here? Retailing, that's a big nothing. Aerospace and defense, inside day, nothing. Internet, that little bit up, and so on. And I was looking for financials on here. Perhaps I have it on a different screen, but they didn't do very much. I can throw them up here and show you. And so with the idea, can the market move up like it did yesterday, today? Well, I don't think it's going to be semiconductors because they already moved up a lot in that resistance. But some of these others, what we would look for is to see if they were to play some catch up, like financials. Can they, they got that bottoming tail bar. Can they move up? If they don't, well, odds are the S&P isn't going to move very far unless oil's moving up. And when we could look at oil, they're kind of stalled. Maybe the small caps move up at biotechs, and then you got to look at regionals. But just looking at the big picture, is a pretty decent move to the downside. This move that occurred, the internals gave us a heads up at the end of last week. It was coming. I think actually it was on Thursday. Then we got the gap down reversal. So how much more can it move up? Well, I guess we're going to see today, and then whether it's NVIDIA, Thursday, Jackson Hole, whatever, those kind of things are going to take some effect. But whatever it moves up, there's been enough damage done that at some point sellers are going to come in to the market again. Saying after brief pullback, 10-year on the move yesterday's mid-afternoon levels. Yeah, and you know what? The market's kind of brushed off the fact that interest rates moved up in the morning. It was, initial jiggles, and then they just kind of, I guess, figured, well, however they're up, they're a little short-term extended, but, we certainly take a look at that to go there. So see the spiders started backing off a little bit, about 10, 15 minutes ago. They were, stuck up here. And you see yesterday prices stopped at that 440 level, that little area of congestion there that we had marked off as our focus point. If it actually was to move up, it came up and closed the little void there. Here was the open, and it pulled back into support, moved up into resistance, and just got stuck there. And you can see, but it had a nice rally in intraday. And again, just nothing fancy. As always, you have to say it. Let it stick in, look to the left. Buyers were there before, prices come down that far. And that was a deep retracement. It certainly didn't suggest it would go all the way back up there. Why might we even think that that's possible? Right? Because everything we do, we look at charts, however you look at your charts, we create some belief system. And so why would we think that's possible? Because the depth of retracement didn't support it, but the fact that the daily was down so much that it could go up that day, we say, oh, well, maybe it could come back up to the high of the day, but it kept going until it got up here. So that was impressive in the latter part of the day, but then ultimately it reached its destination, gapping up today. And, you can look to the left there on the hourly chart. There isn't any significant resistance there, but, started backing off from there. And so now what we're going to see, and now that when it comes back down, it should come back down to this 440 level, give or take, will it hold that area or not? So just like, we look, this isn't really what I'd call a wide range bar, but as we look at that range and just say, well, what would keep this move intact before we start thinking it's retraced too far? And well, if we just look at yesterday's open, and I can throw that on the other charts just to put it out there, and you can see this little area right there would be a pretty normal pullback, right? 348-ish or so, or if it was to this continue to pull back and whatever jiggles, or can it flip back up again? So on the upside, we've got the next level up here at the 50, because we really don't have any obvious places looking to the left there, on this chart. And so while there are pivots here on the 15-minute chart, when momentum begins to shift and you get a turn like that, while it might stall there, ultimately it typically goes up to a more significant point where there's a whole lot of pivots, right, which is really common sense. And we'll just see how things trend this morning. But going back to where we started, I think it's less likely that what led the way higher yesterday is going to continue to rip. And if you look at SMH, look where it is right now. It's stuck right at those converging moving averages, and look at the pivots over there on the hourly time frame. So that's more likely to be a gap and pullback or stall. But the way it ran up, there isn't a whole heck of a lot to stop it from pulling back. So if it gaps and starts coming in, coming down to, filling the gap would be one place, but there isn't much to the left there because of the power of that rally. So this isn't going to continue propelling prices higher. And that's why I said, well, can financials or oil or what's going to move things today? Let's go to look at the futures before we do SPX. We had to make an adjustment there since things began to inch back a little bit. And you can see as these are beginning to pull back toward this support level. And the significant support is down here where it was rattling around. And in reality, it shouldn't come all the way back down there because that's near yesterday's low. But that's where the significant support is. So will buyers step up at, say, 44.20, pivot high up there, minor support, maybe. You got these pivots right there, but things are pulling back here. So I think it's going to be more of a move up and stall and consolidate yesterday's gains and wait for whatever else may move the markets. So bias, things aren't likely to fall apart. Right? So ideally holding above yesterday's low. So we go to SPX. And everything's moved. Well, they moved down a little bit, so you always got to check, but 43.70. That's what I have here. That's near yesterday's low, and prices, moving up a little bit. It's relatively close. Whereas, look at the distance from yesterday's close to where the put strike is and where the call strike is. And the call strike is much, much higher, and it's at the 50 MA. So is it likely to get up there today? I think not. And if it does, you've got, that 50 there and that congestion. So to travel that far today, unless something unusual was to happen, it's not going up there. And so there's just the over enthusiastic call buyers thinking that, the market's going to explode higher today. And, just looking at day-to-day price action where things are, is it reasonable to think that it would go all the way up there today? And I would say, no, it's not. It's not reasonable. So I like that up there as those that want to consider a call spread, as well as the 50 MA being there and tech being up. So unless financials, for some reason, really were to kick it in gear to the upside, we're not going to see it go up there today. All right. NASDAQ futures, where are they at? Well, they're pulling back in, coming into that level there they got above. So they are now, you can see where they're about unchanged on the day. So I had marked off those converging moving averages up there as a reference point if there was some possibility that they were going to go higher, to be aware of, which line up with this reversal up here. And so let's look at the Qs, get rid of the overnight data. And you can see the same, not quite converging, but they're touching each other, but they're right there. And things are pulling in a little bit. And the cursors line up with some resistance there. So I think it's going to be a gap up and stall or come in a little bit, consolidating the gain, especially for tech. Sell off. What am I reading? Oh, Alex is posting something. Russell, inside day. And look at the way this is coming in right away here to Unchained. Doesn't mean it can't come back up again, but you can see the pivots there on the 15-minute chart. And, some decent resistance. It underperformed, of course, because it didn't go up as it did yesterday. We don't get a pre-market data, but the transports didn't do much of anything yesterday. Oh, it was pretty much all tech yesterday. The Dow, dipped down and it came back up. Nothing there going on. Futures pulling in pretty quickly over the last hour or so, coming out to the support. Just kind of running in place. So from a daily chart perspective, not really no damage being done. There's a hesitancy. This is out at support. Sometimes they just rip back up if they're not doing that. And so suddenly the treasuries dropped fast. The bonds themselves, where are you talking interest rates? It must have been the bonds because this is now green. Yeah, interest rates popping back up. So equities coming back down. So we covered this theme over the last couple of weeks of interest rates going up and the dollar going up. And we covered yesterday the fact that even though we got market internals having reached a bullish extreme, the intermarket analysis part of what we do is still bearish. We can't be all out bullish, even though prices are short-term extended to the downside. And pretty strong. There's no pivots. They were down a little bit before, and now, moving back up again. And I want to see the 30-year because they were leading. A little gap down and move up. So A little extended. You can see the distance from the 20 MA and the distance between the 20 and the 50 getting a little extended apart. So this could reverse itself at any moment, just because it's extended. So while it's certainly, it's in an uptrend and could go higher, and whatever reason it flipped back up here this morning, being extended as it is, this could just be where it's starting to pull back again. And we saw the markets having done with congestion that they're going through. The 13-week, is that a bottoming tail on the diamonds? I believe there was a bottoming tail. This is starting to move up a little bit, not significantly, but 13-week moving up a little bit. It's interesting that it's moving up, only because this is kind of a measure of belief of the Fed raising interest rates, staying pat, doing nothing of significance, but any bottoming. So bottoming tail, David is asking about a bottoming tail on the diamonds, which means prices went down and they came back up again. And so can they get above the high of the bottoming tail bar? Do they can go sideways? So a general rule of thumb is, look, after 3 days, let's just say today goes by and today's an inside day and it doesn't do much of anything. If it can't take out these highs, right, after spending another day going sideways here, that's going to be a little bit of a bearish sign, because having 3 days of going sideways sets up a nice intraday base to launch a move higher. So keep that in mind. A bottoming tail bar, a wide range bar, green or red or whatever it is one bar. You have to put it in the context of the trend and what's to the left. So if we could take this, let me just, without going too far, because it's getting late already, but this, and Itchy's in the room, he's new member of the green room. I explained this yesterday about continuation patterns. Continuation patterns typically happen after the initiation of a move. So if today was to turn into a red bar and then it started moving down, that would be a continuation pattern, because this isn't to any significant support. Now, if these two bars were happening down here, the reliability of the signal of these two candles down here at support in the 200-day moving average, especially after a sharp drop, would be overwhelmingly in our favor in the bullish case. So I hope that all makes sense. And the other things, you can see gold isn't moving too much. Silver isn't moving too much. Oil isn't moving too much. So not a lot happening there. So let's not get too excited about anything significant this morning, because it don't look like anything significant in the play right now. All yours, Dan.
Good morning, like always, even though we might not be excited about broader markets, we're always finding marvelous subs for stock and option trades. So a couple earnings here in no order. Zoom, bottom right. I think Sam sold some 60s yesterday. Nice job into earnings. Was up, now flat. If it can stabilize, take out 5-10 minute high, I'll look for that for a new put spread under 64s. Macy's. We actually were looking at this as a short straddle into earnings, but I didn't do any earnings trades myself yesterday. Sam did a couple. So this was up big, fairly big, and now it's down even bigger. It's ideally this will sell off to the 13 area, and then I'll look for a reversal, maybe put spread. Lows. This was one I said it looks lower, but a shock bullish gap, then would turn this into a W bottom, new low plus. And that looks like it might be in the cards. So that I got it on the other computer. Let's watch this for a put spread. NDSN. I'm assuming this is earnings. Nordson. It's not Nordstrom. This is an industrial company. I was hoping it was gapping down to 220, and then that would be a possible gap and snap. But I have another computer. The disaster this morning. Look at Dick's Sporting Goods. Man, this always shocks me that a company's been in business for decades and they report earnings 4 times a year. How on earth can you be this drastically off? I mean, I don't know if they're obligated to pre-release anything or give guidance or anything like that, but I'll bet some class action securities attorneys are looking into that. That's a nasty gap. So I have it on my other computer. I'll put it in the excessive gap category. It's dragging down some competitors. Look at ASO here. Look at Foot Locker. This thing's been in a coma for months. And I didn't see this yesterday, but that's a nasty breakdown yesterday. Now it's gapping down with the sector. That has room to fall. Nike I didn't look at, but gapping down too, but that one's down a lot already. All right, I don't have these in any particular order this morning. Deere had earnings the other day. It's a real company. I was hoping it would have kept going to 380-ish. Clorox down a lot, greater than 100% retracement. If I can take out this pivot here, then I like it as a put spread. IBM's been on our list, little buy setup. Foxtrot November. That is a monster bullish gap. I don't know if that's earnings or something else, but I don't trade big old gaps like that. And Checkpoint, just been on my list. Yeah, Hibb's another one that was a dog and down over here. We actually traded it on this igniting bar right here. So that looks like a call spread, Hib. See if there's any juice for the option traders over yesterday's high. Baidu, I was looking at this as a selling a put spread into earnings just because things that are down this much near an area of support into earnings. Yeah, see, that's where I would like statistics. I'd love somebody to just tell me the statistics. Something like, because first of all, you got to define what the following means. Down a lot and from the top of the range to the bottom of the range on support. Fluid move down far from the 20. So once you define that into earnings, I would love to know the statistics on where do these stocks close the following day on earnings. I don't know. It's just off history. I think it's probably 80%, 4 out of 5 times. But that's unsubstantiated research. Monso 2242. Sure, on a pullback. It's a big gap. With the market up a lot, Diamonds gave it up the most. Diamonds gave up the entire gap right here. Remember, they were the one relative weakness yesterday. Q's holding the best in terms of retracement pre-market. Then Spiders and IWM. We put on a put spread on IWM yesterday. Financials are on sale. Yeah, there's, there's just a lot of stocks that are down a lot, making the turn. Look, Upstart's on my list. I actually sold naked puts yesterday myself. Airbnb hasn't made the turn yet, but it's on my list. So S&P Global downrated a bunch of regional banks. I went through them all, and it's kind of like a big yawn. None of them were doing anything. But this KRE, this is not a bad pattern at all. Down a lot. It's making the turn here at the 50, minor support. So let me set an alarm on this. KRE. I'm going to set it at 44.62, kind of just going above that pre-market little print I see there. Uber. Yeah. Perfect example of down a lot, making the turn. Now, the reason I like this one a lot, Thomas, is because the turn happened in 1, 2, 3, 4, 5, 6, 7, 8 bars with 2 gap reversals. So that I like a lot. Let's see, do I have? All right. Let me put it in the other chart. That's a beautiful turn. Now compare this turn to what I just said on Airbnb. Airbnb has 0 turn right now, 0. So Uber's ready. Always look at the cousin Lyft. Deep retracement. Uber is a superior pattern. Where did I end up here? An EXR, double bottom, put spread idea. DKS we talked about. Mr. Bill, a gap reversal on earnings. Let's see if we can get 1 or 2 more inside days. MDT, I think, was earnings. This could be a double bottom, major support, new low plus. That's a put spread idea. Put that on the other computer. MDT. Coin, there was some news, but here's another example. Down a lot, no potent turn. So you just got to be patient and wait for your turn. We've been doing these MT lives 5 years now, and we have an MT live called Trading the Turn, and it's a beautiful thing. We're looking for patterns. All right, here, market's open. I got a couple of alarms. Schwab, no, I had an early alarm, no interest there. See, it hasn't made the turn. Whiskey, I actually posted this. Look at Zoom, bottom right, no interest. M here. I never trade earnings in the first 5 minutes, minimum. You have to let these things settle out. But here, my whiskey alarm went off. I forgot to give you that. I sold puts on it yesterday. And I just had an early alarm at 10:20 is all. Wow, look at Zoom. All right, I ain't touching that. Boeing up alarm. I raised the stop already. So that looks great. OLED alarm. Nice OLED. We're long stocked this. Let's sell half right here, OLED. Sell half. Beautiful. Stop 30-minute low. All right, so that's done. India Romeo alarm. All right, this was a 1, 2, 3. Let's wait for a pullback in the gap. CCJ, yeah, that was a nice gap and go yesterday. Monzo, that's beautiful gap, strong. It's just it's hard to tell where your stop is. Oh, you just gave stuff. Zoom, I ain't touching that. Macy's, bottom tail so far. I'm just curious. A GNRC up alarm, or we got a put spread on that. I'm just curious what these